A wonderful good morning to everyone. Bitcoin at 77,000 US dollars. We're experiencing the next minor sell-off, I have to say at this point. It's all due to the massive uncertainty we're currently facing. And it's not the uncertainty caused by war, even though Trump has been making threats again nonstop since yesterday. Basically, time is running out for Iran and the risk of new, let's say, more severe consequences is rising again. That something is going to happen over there again. We have bigger problems, namely that the bond markets are completely out of control. Now, even Bloomberg is reporting on it daily, essentially. We're seeing it in Japan, we're seeing it in the US. Yields have gotten out of control and are rising continuously. At the same time, we're seeing a stronger dollar. We have an oil price that continues to rise due to the new uncertainties triggered by Trump. And the trade deal with China isn't really what I think many people expected. We're definitely going to take a look at all of this now. But before we get started, as always, feel free to give the video a like and subscribe to the channel if you haven't already. And of course, feel free to join the free Telegram talk and Signal group as well. If you're interested in updates, news, and signals, you're welcome to join. You'll find the link for it for free below in the video description. And if you're still looking for an exchange where you can trade everything we discuss here, you can also sign up with my partner exchange, BingX. At the moment still, in any case, there's a fee discount. And you can get up to 10,000 USDT in bonuses if you register using the link below in the video description. First link, video description or comment section. So let's get started. So Bitcoin, as I said, at 77,000 US dollars. We're looking at the 4-hour time frame. The volume is still catastrophic. We are still in our overarching bear flag. For me, there is really still only one scenario, or rather two in quotation marks. If we drop down into the area of 71, or rather 80, 68,000 US dollars. Either we go up from here, which in the end would be, the bullish scenario would be up to the end of the bear flag. But we've already been consolidating here for 3.5 months. Everyone needs to be aware of that. February, March, April, and now already half of May, where we've been consolidating in this bear flag without any really significant volume. Or we break through here and then set a new low down here, a new low. So what speaks in favor of that? Let's dive a little deeper, or rather, let's start at the beginning. At least one reason is that we're going a bit deeper. Now, the page isn't loading again, I can't believe it. I just refreshed it. So in any case, we're seeing a decent spot order flow, or rather outflow here with the CFDs, at least with the longs, or rather futures. We're seeing rising sentiment again, but overall, we're seeing significantly more spot sell-offs. And that's what I've been telling you over and over again for the past few weeks, that we don't have the volume, that we have this buy the dip mentality. And we can see that here as well. In the spot order book, there are only about 20 million, if even that, when spot buys actually come in at all. And that's just not enough to say, okay, people are actually buying the dip here. And that's still really problematic. And if we take a look at this on the larger time frames, that is on the 12-hour time frame, we still have this huge, gigantic wick. And as you can see here, sure, there's a bit of green coming in again, but still this massive outflow that we had here is really not normal. Let's move on to the news. Specifically, the US and Iran are far from reaching an agreement, while the drop in bond prices is increasing the pressure on Trump. Yes, there won't be peace for now. At least that's what Trump posted again yesterday. Time is of crucial advantage and things like that. It's just a shit show now. Either he's going to do something soon. Apparently, there were also talks with Netanyahu yesterday. On Tuesday, a briefing is supposed to take place at the orphanage with the security team. So the next stage of escalation is already underway, and that's why bonds are also rising. Bonds are dropping, racing stocks are falling as oil prices rise. Yay, cool. But that's not all. Let's move on a bit further. Japan is leading global bond markets downward as inflation fears increase. I wonder why that is when an intervention has been triggered in Japan. And even the former chief says, yes, the intervention doesn't help. That's why there are now problems in the bond market. Because if we take a look at the bonds in Japan, we see exactly the same pattern as always. They're rising, they're reaching new all-time highs. Yield intervention makes absolutely no sense anymore. If we take a look at the USD JPY, you can see for yourselves, there were interventions 1, 2, 3, 4, 5, 6 times. And 6 times nobody cared. That's how far it's come. And of course, this also has global consequences when Japan sooner or later has to raise its interest rates. Because they're supposed to rise to 2% by the end of next year. In Japan. And well, in the US, the problem is that the whole situation is slowly starting to escalate a bit more, and not just in the US, but globally as well. And those are the risks, that interest rates will stay higher for longer, which in turn has a negative outlook on, let's say, all kinds of stocks, and of course also on the crypto market. These are the 2-year US bonds, now at 4.1%. We're at the highest level since If we look back May 25th, so for about a year or a year and a half, we're breaking this mark again. But it should also be said that interest rates used to be much, much higher. We were in an easing cycle. Interest rates were supposed to go down, but we're actually still in an easing cycle. But at the moment, it doesn't look like that's happening. The 5-year bonds are at 5.3%. The 10-year bonds are now at 4.62%. And with that, they're now breaking out of our symmetrical triangle. That's not really a good sign what the bond markets are showing here, which then leads to the risk that we might get interest rate hikes. No one really knows, of course, because no one is hearing anything from Walsh at the moment or any comments from him. But in 30 days, the next Fed interest rate decision is coming up. Interest rates are supposed to stay the same also in July and September, although by now in September we're already at 20%. In October we're already at 30%, and by December at the latest. We are at par when it comes to interest rate hikes. And the probability is even higher that we could be significantly higher than that. We won't get any economic data this week, no important economic data, except for Thursday, not producer prices, but anyway, I'll tell you again on Thursday, I can't remember right now. But otherwise, it's a quiet week. That means we have to trade with what is currently available on the market. And that means rising bond prices, or rather, still the same problems. Now, it will all depend on whether Trump somehow manages, although I don't believe it, but then something else will come up. Bullshit post, somehow getting bond yields under control, then getting the oil price under control. But his last tweets had no more effect. That means the oil price will continue to rise. We will, of course, continue to see potentially rising interest rates. That's the connection leading to a rising dollar. By the way, that's also our fractal. I showed that yesterday in the live stream. We'll see a rising dollar because higher for longer yields naturally also means higher for longer rates. And that would then mean, cool, the dollar becomes a bit more valuable because it is being devalued less, which in turn has effects on gold and silver and the precious metals in the end. Also has an impact, which we'll get into in a moment. These are currently the risks we simply have to deal with. As I said, the trade deal that has now been made with China, or rather that has now been discussed, isn't really much. So 200 Boeings that are supposed to be bought, is that really a world-changing event? There was talk of 600 at one point. Then China will purchase at least SIP. 17 billion per year in agricultural products, 2026, 2027, 2028. So much for the topic of agricultural ETFs. And apart from that, it's really not much. And that's a problem. And meanwhile, Trump is posting again that in the end, he has another meeting with his secret people on Tuesday. Great. That definitely looks ultra bullish for this week. That's why my bullishness has... No, just kidding. Nothing has changed about my price action outlook. I still assume that we're going to go a bit lower now. On a higher level, I'll show you again very briefly. Nothing has changed on the chart either. We even still have the chance here that we're in a beautiful 1, 2, 3, the 4 after the 4. Here is the 1. It wasn't hit here, so not here either, and not on IBIT that we're going down now. That would be the chance for the last crash, and then, yeah, to the moon, possibly starting around September or October. That would be the most bullish scenario at the moment. Case, but for that, quite a few things need to change, and the oil price must also not keep going to the moon. Those are still the difficulties we're currently struggling with. Let's move over to Ethereum. Ethereum has already left our bear flag. And how did it do that? It's actually not a good sign when the altcoins are already surging ahead like this, even though, to be fair, nothing has really happened yet, as we have to point out here. Of course, that could end up being twice as bad if Bitcoin crashes significantly more, then it's not a good sign. It's definitely not good. Solana, same story, just look at this. Once again, Solana has played out exactly the same scenario as always. Box formed here, a high, then a second high used again to swap liquidity, and then down. A high, a second high to swap liquidity, and then down. This is the price action you have to deal with in altcoins at the moment. And while Bitcoin has only dropped by $5,000, we're seeing a 16% drop in Solana right away. The liquidity has left the altcoins. Trading altcoins is like suicide right now. That's just how it is. And as long as no liquidity flows in or we don't get any kind of bullish character, I'll continue to stay absolutely away from it and will sell off altcoins whenever any opportunities arise. By the way, it's the same story with XRP. Now let's move over to the traditional markets. We've already talked about the dollar. A stronger dollar, of course, means that capital is actually being withdrawn from the markets. So in the end, we see declining markets. People are moving back into the dollar, essentially securing the yields for themselves again. Capital, possibly also due to the carry trade and possibly also due to rising interest rates. But then it flows back out of the US towards Japan, which would cause the dollar to weaken. But that's still, I'd say, about 4 weeks away, so it will take a bit longer. We've talked about USD JPY, and of course gold is also starting to decline a bit. Why? because inflation is rising, because ultimately the dollar is rising, and as a result, interest rates are also going up. And when interest rates go up, that's bad for gold. So the primary scenario is still that we should first fall towards $4,000 to $3,500. And from there, I'd say we should build a new upward structure. The same goes for silver, of course. Also silver A, B, C, D, E, hopefully downwards. And then here as well, ultimately the same scenario as with gold. Let's move on to the traditional markets. That is the DAX. Still absolutely not cool, I'd say. So absolutely uninteresting for me to trade. The 5-wave upward move was hit perfectly, now an overarching AB and possibly now heading down into the final C. We would normally see the same thing with the Dow Jones, the Nasdaq, and also the S&P 500, where liquidity is still, well, with the Nasdaq, it has gotten a bit higher, but otherwise the volume is still absolutely abysmally bad, which is definitely not good for the markets. The volatility index is also rising again, so you can see here, it just looks more like consolidation, or rather accumulation, which of course leads to the dollar rising, the oil price going up and things like that. And then the volatility index is also rising, so all the counter indicators have gone up in the last few days, including the bond markets, which should actually mean that in the end, the whole market should see a minor low point for now. That's all there is to say about that. Otherwise, as I said, there's nothing scheduled for today. We still have NVIDIA earnings this week, so please keep an eye on that. On Wednesday, which in my opinion should probably turn out positive for now, I think the next earnings are much more important now. So if the war continues and the Strait of Hormuz remains closed, these earnings will become extremely important. Otherwise, Microsoft, the Bill and Melinda Gates Foundation has sold all its shares in Microsoft. Maybe that's also a factor here. So don't be surprised if there's another little nosedive downward for now. And Circle, last week it was like a meme coin, but as I said, as a spot holder, I hope we dip down here again, down to the $65 mark to fill the gap, or rather the inefficiency as a trader. Hopefully to the moon, but at the moment I would stay away. In general, people are trying by any means necessary to long the Bitcoin bottom here or something like that, but it's not as easy as it seems. Globally, so much is happening in the background right now. It's really crazy. But anyway, that's it from my side for now. We'll hear from each other again tomorrow with a detailed update video. I wish you all a wonderful start to the new week. Until then, bye-bye, and as always, stay crypto.